Welcome to the HR Green Room, the place where people, culture, and a couple of splashes of green come together. We're your hosts. I'm James from Phase 3.
And I'm Adam from Phase 3.
And together we're lifting the curtain on the world of HR with fresh ideas, honest conversations, and a few surprises along the way. Each episode will ask what made us green with envy, what deserves the green light, and of course we'll be joined by some brilliant guests who bring their own colour to the conversation. So grab a seat, the show's about to start in the HR Green Room. So welcome back, Adam. Another payroll-based episode today. And today we're going to be focused on payroll, but for the non-payroll professional. And the reason we chose this topic is because we often get asked by quite senior HR people who might be managing a payroll team, what should I know? What should I be looking at? What should I be checking for? So we thought we'd lift the lid on payroll for those people and look at how we can support them in terms of their everyday ownership of payroll. And interestingly, when I first started in HR, I didn't know payroll at all. And it was actually my employer at the time that said, we want all of our teams to be cross-trained. So I'm really lucky that at a very young age in terms of HR, I did my HR degree and then they funded a payroll degree. You've always worked predominantly on the payroll side though, haven't you?
Yeah, I've always been payroll, never HR.
Yeah, so you've implemented HR systems, but you were always kind of had the payroll lens rather than the HR lens. Yeah. So do you think it's easier for a HR person to learn payroll or a payroll person to learn HR? Controversial question.
Oh, yeah. Well, I think payroll is almost black and white, isn't it? So it's numbers, it's calculations. So it's probably easier for HR to learn payroll with it being so black and white. Mm-hmm. But HR can have so many, there can be clauses or there can be differences and you can read one thing one way and have to think about it. And I think can't always be taught because you have to live it, don't you? You have to live a HR career to get through it. But I think with payroll, you can say, this is how you do tax. This is how you do NI. So probably that way is probably easier. Yeah.
And I think obviously in bigger organisations, it is a separate discipline, isn't it? And there is lots and lots of history and knowledge that goes with it. But certainly a HR professional having an insight into payroll is definitely beneficial.
Yeah, and they are so different. Even though they work together, they are completely different. And you kind of choose one and go down that path and not the other.
Yeah. And it's interesting, I was with a customer a few weeks ago and they were talking about HR do the letter with all the calculations on, which then goes to payroll. And then payroll check it and realise HR have done it wrong. So send it back to HR, who then redo the letter and send it to the person. I think, why did we not just ask payroll to give us a number in the first place? Let's smooth this process out. But we're going to start by walking through what a payroll cycle actually covers. So from end to end, what happens in payroll? So I'll ask you to take the lead on this question because obviously it's your day job.
Yeah, and as you say, it is that cycle, and you have a start and an end, but it is a cycle and it begins again. And I think it begins wherever your cutoff is. So once the cutoff's done, and that's the cutoff is to get all your data from the HR team or into the system, you can then begin your payroll process, and it's your starters, your leavers, your changes, salary updates, all those permanent changes. We'd then go through and calculate pay slips so we can see all the pay slips, and then we'd add all the temporary variations into the pay slips, put those temporary variations in, and then we'd carry on.
What is a temporary variation?
So a temporary variation is something that's a one-off. So overtime would be, I'm only being paid overtime for 1 month because I got paid it. A little bit of holiday pay, maybe an absence could technically be temporary, depending on how long it is. So it's anything that's not permanent. So anything that you want to pay this month and not next month.
Yeah, okay.
We then move into reports and checking. So we run a lot of reports. We do a lot of checks. So like you said before, we're doing net-to-net checks. We do other checks. We check totals, we check input sheets. We're basically checking to the source information to make sure nothing's gone wrong. And the best way to do it in a kind of a quick stance is the totals. Does the totals of the amount of overtime gone in match? And if not, why not? Yeah. Is there a reason? Once that's complete, we normally have a sign-off process. So we're a bureau, so it'd be the customer signing it off. If you're internal, it's probably your finance director signing it off, your HR director signing it off. Once everybody's happy, we can send the RTI to HMRC. So that is basically sending all the employee data to HMRC. Issue the payslips at the same time, whether that's email, whether it's self-service, whether it's a portal. Our preference is a portal because they can log it at any time and see as many payslips as they want, and they can't lose it, unlike you can lose an email. We then kind of finish the process. Everybody's been paid. We then look at pensions. So your next step is upload pensions to the pension providers, make the payment across so everybody's been paid. And then you probably have a little bit of what we call a quieter period, where between your payroll being finished and your payroll starting again, but it's the time for you to do your EPS, to balance to HMRC. It's to look at your queries for employees. Some companies have advanced runs like you talked about before. So it's doing those advanced runs, it's re-reconciliations, and also the journal. So a journal for your finance. Some people have it right at the end. Some finance need it as you're paying them so that they can get it all done before the first of the month. It all depends where that fits in the cycle, depending on the customer.
So let's unpick some of that a little bit. So in terms of the checks that payroll are doing, so you talked about kind of differences checks, but from a compliance perspective, what is the expectation that payroll are looking at in terms of legislation each period?
Yeah, so things we look at are tax, NI. Is your pension set up correctly? So if you're on a salary sacrifice scheme or a net scheme, it's things like if you are sick and you're on statutory only, can we deduct the pension? Because if it's, is it a net scheme? Is it a sal sac scheme? Same with kind of overpayments that might be deducting. It comes down to the legislation of what you're being paid. And then a real big one is national minimum wage. And obviously it's going to go up with the budget, so it makes it probably more likely because more people will be going through the check. So we do some national minimum wage check to check nobody's below. There's lots of things to take into account. So there's different pay codes that can count towards it. There's hours that they've worked. There's extra hours that they've worked. There's absences. There is a lot to look at. So we just need to make sure that people are above the national minimum wage, and all those SALSAC things. So pension, you might have a cycle to work, you might have the old style childcare vouchers, you might have a technology. All those things have an effect on it.
So it's fair to say that a national minimum wage check isn't just, well, I pay this person £16 an hour, so job done. Basically, you have to assess each period.
Yeah, and I think there's something like the court order admin fee of £1 is actually taken into account, and people can miss it, but that £1 can have a difference, can take someone below national minimum wage, and that's where people have been caught out before.
And this is only the bit that payroll know about, right, as well, because there are some organisations who have fallen foul of national minimum wage legislation where they expect an employee to turn up 15 minutes early at the start of a shift and then leave 15 minutes late after locking up, for example, but they're not paid for that time. So that 30 minutes every single shift is unpaid for working, and therefore that should be taken into account for the national living wage calculations as well.
And as you said, the payroll team would have no idea about that.
Yeah. So having processes and governance upstream is really important so that when payroll get the data.
It is.
Yeah. And national living wage is a real complex issue when you mention pensions there as well in terms of salary sacrifice. So have you seen systems that do automatically flag if an employee is dropping below national minimum wage because of salary sacrifice?
We do, and it's all about, has the system been set up correctly?
Yeah.
So as we said, there's lots of things that count towards it, so you need to make sure they're flagged to be part of the calculation. And I suppose the key thing as well, things that shouldn't be flagged don't be flagged, because you could be adding a bonus which doesn't count and it could put them over, but actually they should be under. So that setup is really key, and really drilling into that setup. Yeah.
So if I'm a HR director and my knowledge of payroll is fairly surface level in terms of the operation of the legislation, what should I be asking my payroll team for evidence of as part of the sign-off process?
So it's that, have they done the national minimum wage check? And then if somebody is below, can you look at it and think, yeah, that's correct? Because if it's not correct, it could be like your config is wrong. I would definitely be checking pensions. So make sure you're making at least minimum contributions, because some people might not be on a percent, some people might be on a cash, but then had a pay increase, which actually takes them below the minimum percent. I'd be checking tax refunds, tax changes, tax code changes, because if all of a sudden you get a load of tax code changes, it's probably wrong. Something's happened in the system. Where
P11D time.
P11D time, it could be. And you don't want that to happen where nobody notices until they're paid and everybody's like, why am I paying double the tax than normal?
Yeah. And we have seen that before, haven't we?
We have.
So there's some of the things that the payroll team should be checking for. In terms of the HR perspective, when I'm asked in terms of what HR director might be looking at, and finance director when they're signing off payroll, finance are usually more focused on the actual payments out of the account in
Yep.
terms of what net pay values are. From a HR perspective, I think that what we should be looking at is a summary of the transaction. So how many new starters have we had? How many leavers have we had? How many contractual changes? Were they all anticipated changes? And ultimately, can payroll show you that they've had a starter, it's being calculated, and it's calculated pro rata, for example, because it's the first period.
Yep.
So seeing the evidence of those checks actually taking place in payroll, and that can be from reports. But also what I want to see is a gross pay differences and a net pay differences to actually understand what is the movement in payroll from one period to the next. Now, we've got a client who every April pays all their bonuses and all of their salary increases happen. So almost every single person on the payroll has a change in pay. So how would you approach reconciling and checking payroll in one of those kind of periods?
I think that does make it really difficult because you almost have to check every person, but it goes back to those totals. So can you take account of the bonus total and the gross pay? Yes, at least it matches the input.
Yeah.
You know, you could do a little bit of a small calculation where you get 62% value where you've taken off tax and NI and pension, a generic number. Is it close? At least it gives you a ballpark figure. Salary increases, is it 5%? Is the difference 5%?
Yeah.
I think it's just, you know, sometimes it's not worth checking every pay slip for those changes because you'll just get lost in it and it'll just be bonus salary increase. You won't be checking it. But if you do some high level and maybe overseeing calculations like a percentage guess and totals, you're probably more likely to see someone stick out where someone's gone up 15%. Oh, well, why is that? But if you were looking at payslip to payslip, you just go, oh, he's had a salary increase, so it's okay. You wouldn't have realised he's gone up 15 instead of 5.
Yeah. And systems should be able to take the bonus out of the calculation. And that's almost a check in itself. Should they do salary increases, do the payroll check-in, then load the bonuses, redo the check-in to see the difference then on the bonus in particular. Okay, one of the things that we often get asked about in terms of payroll is a lack of understanding sometimes of all those things that happen outside of the key processing time. If you've got a weekly payroll, we know in payroll you're always going to be busy pretty much. It starts every Monday morning usually, and normally you're paying by Friday, so backs is out the door on Wednesday. So it's a busy period. But where you've got a monthly payroll and payday, say the last working day, a lot of HR people say to us, well, what are the payroll team doing for the rest of the pay period? So you talked a bit about that cycle in terms of when things start, but roughly, you know, out of a full month period, you mentioned a quiet period as well where you tend to focus more on queries. What is the general kind of date-driven application of payroll through the month?
Yeah, so if you're kind of paying at the end of the month, last working day, you know almost work backwards to do a calendar. But as a rough guess, you would say probably around the 15th is your cutoff. So that's when that process that I talked about starts. 2 days before, maybe 3 days before is your backs because you want a contingency day. Or if you're using faster payments, you actually get an extra couple of days, which is helpful. You want at least 2 days probably for check-in because what you don't want to do is you don't want to put it all in, run the reports and just kind of send it because you know that there's going to be something in there. You need to take the time to check it, and it's actually probably more time efficient to take the time to do the checks than kind of just send it across and someone comes back and go, I've noticed all these errors, and then you do 2 runs, 3 runs, 4 runs. They actually take longer than just spending the time to do the check. So in between that 15th and the end of the month, that's your busy period where you're doing your checks, you're doing your input, you're speaking to people. And then after that, so between the 1st and the 15th, you've got your pensions, you've got your HMRC submissions, you've got your queries. But like you said before, you might actually make a start on next month. So you've cleared your payroll down. If we know there's going to be an influx of new starters because it's a school in September and there's going to be 100 new starters, make the start on it. Just because you put a new starter in the system, you can future date it. So as long as you future dating it to 1st of September, but we're doing August payroll, they won't get paid, but you're ahead of the game. What you don't want to do is wait till the 15th and try and do 100 new starters in a panic.
I've seen many kind of payroll people over the years who have not run the first calculation of the payroll until maybe sort of the 20th, 22nd when payroll's the end of the month. I always find that quite strange because in modern systems in particular, you usually can automate the payroll process to be running almost continually, basically.
So it's live and up to date.
So in that story I told earlier in terms of that picking up a tray and taking it across to the next team, that's batching and queuing all the work. But ultimately, when you when you are doing continual processing and that new starter, as soon as they're added, you started to check them in the system, make sure that they're clear with API integrations, for example, from HR systems into payroll if it's separate. There is no reason to wait, is there? So you can spread out that quality check throughout the period.
Yeah, and then that's why you go to the process of you don't really have a busy and a quiet period because you've smoothed it out.
Yeah.
You're always going to get a little bit of a busy at the end.
Yeah.
But again, it's speaking to your HR teams and let them know that this is where it's critical. Don't be sending us loads. Don't say I forgot everybody's bonus at this point, because that's when you make it difficult for the payroll team.
I think it's important to acknowledge that different business stakeholders need different things from payroll throughout the month, don't they?
Yeah.
So your employees obviously want their pay on payday. Prior to payday, there's the sign-off process, the reconciliation. After payday, there's finance needing the general ledger and the journal, which needs passing across into the accounts team so that they can then reconcile those journals and upload into the finance system if they're producing month-end accounts. You've got third-party payments to court orders, for example, maybe suppliers if you deduct things like Unison subscriptions from payroll, or loans or accommodation costs to send elsewhere. And if you've also got salary sacrifice benefits, for example, there might be a benefits administration window that you've got to do. Then you've got HMRC, as you mentioned, which is by the 22nd. You must have reconciled all that. So although payroll focus on payday, actually there are lots of dates through the month that are really important. Yeah. And it's interesting in terms of payroll that people often think payroll is first to the end of the month, but the tax period is the 6th to the 5th, isn't it? So there's even nuance there, isn't there, in terms of how payroll teams have to operate. And EPSs and submissions to HMRC for apprenticeship levy are really important as well in terms of reconciling those. So we've mentioned FPSs and EPSs, but in a nutshell, what is the point of real-time information and what's the impact of that on employees?
Yeah, so it's getting all that data to HMRC. So you can do a lot with your own portal now. So if you haven't, I would definitely recommend signing up to HMRC. You can see those FPSs each month and you can check they're correct.
As an employee?
As an employee, yeah, I think it's a really good thing to do. It's almost a double check and to check it's right, because what you don't want to do is never check and then you get a tax bill at the end of the year. Where it's almost too late, isn't it? Because they've already sent you the bill. But yeah, those real-time informations are really key, especially for people that are on kind of universal credits, working credits, anything like that. It's driven from those values. So I think it does have your name and address in there, but if you do move house, you do actually still have to update your actual address with HMRC. So some of it is in there, the information that you still have to update yourself, but all those things to go across are really key. It gives HMRC a picture of you. It gives you a picture of your tax. If you move in between tax bands and you maybe need a tax code change, that can then happen mid-year rather than it kind of being built up and at the end you get a tax bill. So it has improved and it has got better. But the Irish payrolls, they do it the opposite way to us. So they did RTI, but quite a few years after us. So they kind of learnt from our mistakes, and they do it the other way, where it's almost sent first, and you get the information live. Where for us, we're still doing P45 for new starters. Where in Ireland, their HMRC are going, here's all the data from that employee.
So it's them telling the employer rather than the employer telling them. Yeah, it's interesting. I worked in payroll back when RTI was first introduced, and it was described as the biggest change to pay as you earn since the 1940s or something like that. And it was a really complex thing to get your head around back then, wasn't it? Because the principle of doing a year end every single month, which is ultimately what you are doing, you're constantly reporting year-to-date figures to HMRC, seemed like a massive deal to payroll, because we were used to balancing P32s and balancing P14s and sending P11s off to HMRC. And at the start of each tax year, you got the massive pile of paper, tax code changes, and employees would sometimes have to wait 6 months for a tax code to be updated if it was incorrect.
A long time.
Yeah, so it has had a huge impact. And as you said, the biggest impact that was there was for universal credits. Now, that's something that we often talk about with our customers in terms of managed service customers, because there is sometimes a fundamental misunderstanding in terms of how payroll payments can affect an employee who also receives benefits. So if I do overpay an employee in this period, what is the correct action to inform HMRC if the employee has returned that overpayment?
So I would make a correction in the period. So by doing a correction in the period, it gives them the correct payslip. you can reissue the payslip with the correct value because they've repaid the money. But then you do a corrective FPS to HMRC.
Yeah.
So what that's saying is the last one I sent you is incorrect. This is the newest one. Use this one and use the values. So if they were over the limit to get the universal credits with the overpayment, but then they're now under, doing that means that they will get the payment.
Yeah.
If you waited until the next period and the next FPS, which is 30 days in the monthly cycle, they will have been underpaid by universal credits, which can really affect them. They've just paid you the money back that they were overpaid, so they're going to have a shortfall, which they won't then reclaim till the month after. So I think it's really important that you make those changes straight away and send the information to HMRC, because what's the point of it being called real time if you're going to wait 30 days?
Yeah. The impact of that can actually be a 60-day wait, can't it, as you say, because they've got to flow through HMRC systems, then wait till the next payment. The other thing with universal credits is that not everybody's earnings assessment period is the first to the end of the month, is it? So for some months, in particular where paydays come early, like in December, it can have a negative impact on employees paying people early, because they might then have two salaries in one earnings assessment period
and
for
that's
them.
what it looks at.
That's exactly, So in terms of paydays moving in December, it is a controversial topic in itself, isn't it? Now, we for many years at Phase 3 moved our payday to before Christmas, but then we also used to shorten the January pay period because February's short anyway, so it smoothed it out to a 5-5-5 week rather than a kind of 7 weeks and then 4 weeks payroll. I've only ever known one other customer do that, and it was very recently that they said to me, oh yeah, we pay early in January as well, so that it's not as bad for people after Christmas. What is a more modern way of getting around that problem in December where some people want paying early and some people actually don't want to be paid early?
Yeah, and I think it comes back to EWA, so earned wage access, where you can draw down on your pay before payday, and we offer it at Phase 3. So like you said, we're going to keep our payday to the end of the month, but if you wanted to, you can go in and you can basically draw down. There is limits, so I think we do 50% of your pay up to a maximum of £500 value, but what you've earned up to that date you can draw down. So for example, if I wanted to be paid early in December, I could go in tomorrow, I could say I've earned X amount and I can draw down what I'm allowed to, and I would technically be paid early. So there's no impact to payroll on that, there's no impact to the FPS, we're not doing a salary advance in payroll. So we're keeping it completely separate. So there's no adjustment on my payslip. It won't show ins and outs. Like you said, it keeps it all completely separate. So it's no extra work for the payroll team because it almost does it itself. It's an automated process. But for me, I get a payment in my bank tomorrow. I get a payment in my bank at the end of the month. And if I add the two together, they're going to equal what my payslip says.
Okay. All right, so we've talked about national minimum wage and RTI. Pensions auto-enrolment. This is another challenging topic, isn't it, in terms of payroll and what needs to happen there. So again, just give us a brief overview of what auto-enrolment actually is.
So auto-enrolment means when you earn over the limit, which is 10,000 and over 21, you'll be automatically enrolled into the pension. The reason the government have done that is so that people are paying into the pensions, because it's very easy to opt out and then you get to the end of your career and you've got no savings, you've got no retirement, and it can be detrimental. So the idea is that it's opting everybody in. They did a couple of changes in percentages, but it's been fixed at 3 and 5 for the last, I think, 5 years, and the foreseeable. It's a way for the government to get you to pay into the pension, in effect. And there's different types of pension schemes as well.
What I always find interesting is in some organisations, they have contractual enrolment. And this is where some employers can come unstuck, can't they? Because if they use a postponement period, so you can say as an employer, for the first 3 months, we're not going to auto-enroll you because you might choose to opt out yourself anyway, or you might not earn above the threshold anyway. But some employers say from day one, we're going to bring you into our contractual pension scheme. So in month 1, if I earn £500 because it's a shorter month, I've not earned the 833 limit for auto-enrolment, you contractually enrol me into the pension. And I say, actually, I don't want to be in the pension, I'm opting out. I've only then opted out of contractual enrolment. Not all enrollment. So in month 2, when I earn my full month salary, which is more than 833, you then have to bring me in again. And that, I feel, is what a lot of employers don't understand the implications of. Yeah. And I think it's really important that employers do understand that if you have contractual enrolment in place, it doesn't trump auto-enrolment. It's almost like people that say, well, we pay full sick pay, so we don't report it anywhere. You should still be reporting statutory payments through to HMRC. That's not something that should be missed just because it's full pay. And if it's full pay for 6 months, which is generally 26 weeks, there's still 2 weeks where it's SSP only. And if that's not in the system will want to
pay 26 more weeks.
Yeah, 26 more weeks, exactly, yeah. So I think that auto-enrollment is something that's quite complex. And the other thing that is more of a HR responsibility generally with auto-enrollment is the communication to employees, isn't it?
Yeah.
Now, there are standard letters from the pensions regulator, but on top of that, there are things that you can do, such as including in your standard offer letter template the process of auto-enrollment and the fact that if you meet the criteria, we will enroll you, to prevent having to send separate communications. Yeah. And what about re-enrollment? What's that?
So re-enrollment is every 3 years from when you started your auto-enrollment. So that's for the employer, not the employee. And it basically puts everybody back in. So if you've opted out in that 3 years, when you get to the end of the 3 years, everybody will be re-enrolled. And it's like did you mean to opt out? It's been 3 years. Have your circumstances changed? We think you should pay towards the pension. And that's the government's idea. People can still opt out again. But it's that cycle so that you're not opted out once, 20 years later, you're still opted out. It puts you back in the pension. You can move the date slightly by 3 months either side of your window, depending. And again, you need letters and things to go to the employees. And some people like to send the letters early so that the employees are expecting the change so they don't just get a deduction and less pay in that month.
Yeah. And opting out of the pension, generally the recommendation is the employee should opt out to the provider.
Yeah.
Yeah, so they have the record and that substantiates.
And then it filters down into payroll,
Yeah, okay. And from a pension perspective, one of the choices that people aren't aware of always is that in re-enrollment, if an employee has opted out within the last 12 months, you can choose not to re-enroll them because they're still within their 3-year window ultimately.
Yeah.
And that's often a setting that's in payroll systems, isn't
Normally,
it?
it's a little tick box.
Yeah. Always a tick
Always
box.
tick box.
It's always a tick box, yeah. Okay, so if you are a new HR director, I'll ask you the question and I'll give my answer as well. New HR director or a HR director that's been told they're going to be taking responsibility for payroll, what would be the top thing that you recommend that they actually do as part of that process?
I think the thing that they do is they find out from the payroll team the calendar, what goes on in each period, what can and can't be changed in each of those kind of cut-offs.
Yeah.
And I think it's really key to work with them to say, what doesn't work now? What can I change? And the same, the HR people saying it to the payroll team. 'Cause I think it's a two-way street. It's not just, like you said, because payroll are busy, they should just listen. It's a two-way street. It's HR, I've got a great idea. Maybe we should implement this change. I think it's putting the two teams together, just like you said. A lot of the time, they don't even sit near each other.
Yeah. Might be at home now.
Yeah, maybe, yeah.
Yeah. Okay, so I agree with that, and I think I would take it a step further in terms of if you are taking responsibility for a function, I would want to understand what are the key metrics of success in that function. And for payroll, paying people accurately on time is the number one, isn't it? But also understanding, are we measuring the key things we should be measuring? So are we measuring auto-enrollment compliance, national living wage compliance, and are we checking our payroll is actually valid and reporting statutory payments and deductions correctly? So I would want to see evidence of that process taking place, and I think wherever possible, try and get involved in the processes as much as possible.
And I think that evidence is key, because just because someone says it's done, as the HR director, you want to see that evidence and you want to see it monthly. Yeah.
Payroll disasters are often reported in the media. And the payroll teams are often blamed. But actually, 9 times out of 10, it's usually something upstream that's happened that's affected the payroll team.
It is,
The wrong figure was given by somebody upstream and it's in the system.
It's gone,
And the payroll team have checked that the system matches the value they were given and they've done their job correctly. But that is one of the key challenges, looking at the validity of an actual payroll. So we're coming towards the end of the episode now, and one of the features that we have is a green light idea. We've got our own green light right next to us here, but what is an idea that you would like to give the green light to in payroll?
Yeah, definitely. It's some of the things we spoke about before. So I really like faster payments, and I think everybody should use it because it gives you the flexibility of more time for check-in. You haven't got the backs window. You can pay somebody within 20 minutes of it being signed off, I think, which is really key for an employee, especially if something's happened and they need the money. Linked to that normally is EWA, which we use. So I really like that idea because, as I said before, I can draw down at Christmas and I can have my pay early. I can do it if my dishwasher breaks and I need the money. I can go draw down and I can get it within an hour and I can buy the dishwasher. And then linked to that, I think, is something that where we could pay our bills through payroll potentially. So you either pay your bills through the payroll or through the EWA. It then means the money you've got, all your bills are done and kind of paid for. And in our EWA, you can do a savings scheme, which I think is really good because instead of me drawing down to my bank, I can draw down direct to a savings scheme. So that means on the 5th of the month, I might have earned enough to draw down £200 and I can put that straight in a savings, but I'm getting that interest from the 5th to the end of the month and on that money that I've earned, where if I wait for payday to save it, I've almost missed out on a month worth of savings. And you can set up kind of recurring. So I do that every week. It's just that little bit extra and being kind of more money focused, especially when times and things are increasing.
It's an interesting principle, isn't it? Because we talk a lot about earned wage access, but what you've mentioned there is actually flipping that on its head, isn't it? That actually I'm going to put something into my savings every month. So when I draw down, I'm actually drawing down from my savings from prior months, not what I'm going to be paid at the end of this month, which is a different idea in
itself, isn't it?
Yeah. And EWA often has kind of negative connotations of Wonga loans and payday loans attached to it, doesn't it? But I think it is really interesting if you can do those savings. And that actually comes to my green light idea, which is I would like to see all payroll software automatically reminding employees at certain times to encourage them financial well-being wise to invest in savings. So whether that's increasing pension contributions or opening a savings scheme with the employer that's protected at times such as if you've just had a pay increase, for example, if you might have just had a bonus payment, if your student loan contributions have just finished or postgraduate loans have just finished. So those certain milestones in your payroll journey, having that prompt to say, yes, you could take this home now as more net pay, but actually, would you like to invest more in yourself for the future so that you don't feel it as much?
Almost like automatic. Your net pay has gone up by £20.
Yes.
You want to put the £20 straight into savings? Like you can
or even 10.
Even 10, you could do these penny savings, can't you? So every time I buy something from the shop, I can roll it up to the nearest pound and pay it into a savings. Before you know it, you've got a few £100 in there, you've got a few £1,000 in there.
Exactly, we do that with our bank and it is incredible how much it adds up, and we've just changed the settings so it's doubled up now. So instead of like if it's 99p, it does 2p instead of 1p. It's incredible how much it saves throughout the year. We have a separate pot that it goes in and we call it the rainy day fund. But those things linked to payroll probably are going to be the future of payroll, aren't they? You know, we're already doing court orders from people's net pay. So why can't we do British Gas and Sky and
and it might stop people getting into that situation where your direct debit isn't till 20 days after payday, you've spent it, you can end up behind with those things. If you just pay it all straight away and it's gone, you're then almost free to do what you want. I
think I'm probably old school in my discipline that when I get paid, all of my money transfers out into two accounts. I have my bills account and then our joint account, which is our spending money, basically. But then on the day before a bill goes out, everything automatically transfers back in. And I've done that for years. But that's all work for me to do. Whereas if I could just nominate my payroll ID from that provider and say, we're linked, so I'd like to pay my Sky bill directly from my salary. All I'm getting paid into my account then is everything after my bills have been paid. And particularly for people who struggle financially, who might be suffering some kind of financial abuse, it's a real safeguard in place that is to help them. So that's my green light idea, as well as teaching kids financial literacy in school. I think everybody should be taught what tax is and how to calculate
how to look at your payslip and know what it means.
Yeah, exactly. So thanks, Adam. We're at the end of the episode for today. Thanks for joining us in the HR green room, although I think today it's been more of a payroll green room. We'll be back with more honest conversations, some brilliant guests, and of course our weekly Green with Envy and Green Light moments. So don't forget to subscribe, share, join in the conversation, and until next time, keep giving the green light to the things that matter the most.